Today, Governor Lowe and the Reserve Board met, and no surprises here, cash rate on hold at 1.5%. So a bit of rinse and repeat, as I like to say, and that's definitely going to be the case. I'm calling it here now. It's definitely going to be the case right through until the end of 2018, and I can't see that changing anytime soon in 2019. And that's because we are delicately poised in terms of our sentiment story. So we do have some really good confidence story around, new business spending, infrastructure boom, and also good export results. But where we are being challenged now is where housing plays a fundamental role in the broader economy. And by that I mean, let's take a look at some of those points. Firstly, we've definitely seen the top of the cycle in the last piece of house price growth. And why are we saying that? Well, we're seeing that in the numbers. Property prices are going down, clearance rates are coming down, and that's been manufactured by the intervention by APRA and what's happened there. But the story continues, doesn't it? Because we're seeing what's happening out of this Royal Commission, where we may see some even further tightening around credit policy. Now, that's challenging because there's a lot of people out there, and there's a lot of household debt out there where they had gone and got borrowings, and now they're going to struggle to potentially refinance those borrowings to other lenders because servicing calculators have reduced the amount of credit that we're able to have access to. So that is starting to make the consumer and the household a little bit more nervous, and we're seeing that in retail spending and just in general consumer confidence. So it's absolutely critical that we get that sort of story onto a level ground. So it's a soft landing, certainly not going to be a big correction, but it's not giving the Reserve Governor or the Board any chance to move rates higher, because we know that that will impact sentiment incredibly and basically stop all consumer spending, which will mean that economic growth will slow, and if not, go into recession. So that's going to be challenging. Now, we couple that with also what's going on around the globe, and at the end of last year and early in the new year, we did see a basically unified growth story happening right around the globe. Now, that is being challenged at the moment by a couple of things. We're seeing political instability in Italy and the European Union, so that's making Europe a little bit more nervous. We've obviously got the US and North Korea story that's playing out right now, but we've also potentially got some trade wars. Now, we have seen both the US and the China government sort of quell those trade stories, but we're still seeing, the administration, the Trump administration, push forward with a bit of tariffs around Mexico, Canada, and those types of things. So it is happening, but not at that sort of big end of town where it's China versus the US of A. And you can understand both of those economies get it. Both of those political instruments get it, that we need to see uniformity around united trade, because when we get that united trade, we get global growth, and when we get global growth, we get jobs and prosperity improving. So that is the challenge. So when we circle back to Australia and we also then have a look at the unemployment story here, it's an interesting one because we've got record population growth and record immigration. Now, that's a good news story from a consumption point of view, bringing more people in, and it's also a good news story longer term for the economy in being able to continue to grow the economy. But what it also means is there's more competition for jobs, and that is obviously meaning that employers don't have the pressure to be able to increase wages because there's not pent-up demand in that employment space where you've got a lot of competition. So that ultimately means that we're not going to see any sort of pressure on wage growth for the short term, and that means that really inflation will probably be benign, and when those types of things are benign, there's absolutely no reason for the RBA to be pushing the cash rate higher. They need to see sustainable pressure and stronger growth than what we're seeing today, and that's why right throughout the remainder of 2018 I'm going to be telling you why the cash rate will remain on hold. Thanks for watching.